Welcome to Limit Up, the weekly capital market podcast. My name is Don Collins. I'm a chartered accountant and business advisor of 30 years, a partner at Findex, a leading financial advisory and accounting services firm based in Australia and New Zealand. I'm here with Ian Reynolds, trader and investor, former bank, foreign exchange market maker, early investor in Bitcoin and tech founder. Welcome, Ian.
Hi, Don. How are you?
Well, and yourself?
Yeah, pretty good. Interesting day.
It certainly has been, and an interesting week. Making money in stressed capital market situations is tough. A typical investment portfolio will often fail. The world is moving into really challenging times as the US tries to address its $38 trillion in debt, contradictory fiscal and monetary policy, internal conflict, plus numerous wars. And the rest of the world starts to consider a new global reserve currency, a multipolar world, and aging demographics. So how can we understand what's going on in geopolitics and macroeconomics? Luckily, Ian is here with Siberia Capital's latest press release. Ian, up in flames. That sounds rather ironic, I think, or is it just a reflection of the last week?
I just looked at X and it was all flames from Iran.
Right.
But pretty much, I did actually think about it, believe it or not. But pretty much, it's some of the things we thought were true are not true now.
Yep.
I mean, in particular, you could say, particularly Dubai and the United Arab Emirates, their dream has gone.
Spectacularly at the moment.
Yeah, I mean, every time I used to fly on Emirates into Dubai, and you see the map as the plane goes down.
Yep.
You see Iran on one side, and you see Saudi Arabia on the other, and you go, right, okay, we're going to this tiny strip of land in the middle where there's no natural water,
No.
and I always had an idea that it wouldn't last too long. And apparently,
although things like that certainly would rebound, one would think.
Well, I mean, if I've always travelled via Emirates back to London 2 or 3 times a year, and now I'm going via Singapore.
Yes, so but that will be a short-term approach to it, surely.
Well, as I said in the press release, the reason why gold is stored in the Federal Reserve in New York is there's 2 ginormous oceans either side of it.
Yes.
Like there is around the Bank of England, which possibly has more historical and armed force involvement, but that capital is not going back to the United Arab Emirates
right
anytime soon.
Yep. Okay. So tell me more about what's in the press release.
Yeah, so basically that was the first paragraph, and really it's all about the markets where they are today and what they're doing. And just as a check to where we are, so since Friday's close, oil is up 26%.
Yep.
And the futures for the American stock markets are down 2 to 3%, depending on which one you look at.
Yep.
Unbelievably, Bitcoin is up.
Okay.
2% actually. The ASX, which started 2% lower, and I think was a lot lower at one stage, is up 0.2%. Let's call it flat, but
sure,
that's pretty unscathed.
Yep.
Gold and silver are down sort of 2 or 3%. Dollar is higher, but not too much. So the markets are really all over the place, I think. And if you look at, and this is from the article, markets have been manipulated by central banks and governments for so long that they don't kind of make sense at the moment. So currently, with a risk-on environment, investors are putting their money in Swiss francs, which is the traditional thing, to such a point where the Swiss National Bank wants to sell their own currency and buy dollars.
They feel it's too strong.
Yep. Their own currency.
Yep.
But equally, the Bank of Japan wants to buy yen and sell dollars.
Right.
So you think they deal with each other, wouldn't you?
Exactly right.
So very rarely do you have those two situations that coexist at the same time.
Mm, mm.
And very rarely do you have a situation where spiraling oil prices, conflict, lots of unknowns would have the price of gold go down.
This isn't the first time this has happened, though. And has that reflected in the past about gold going down?
So gold is always the go-to for emergencies,
Yep,
like the US dollar used to be, which hasn't been quite so much recently, and the Swiss franc has
yep,
always been an emergency thing. But gold is always the place to park your money in an emergency because it's not related to any country. It's
yep,
non-sovereign.
yep,
Now, in a crash, obviously everything goes down because you have to sell your gold. You might have some money in to pay for your margin call on something else.
yep.
But if Bitcoin and the Australian stock market can be up, but the US stock market is down quite a lot and oil is up 25%, it kind of doesn't make much sense.
Mm. You sounded a little surprised about crypto being up, Bitcoin being up a couple of percent.
I think I'm just very pleased because I bought some last week. And as I saw it overnight, I thought, oh, here we go again. But I mean, it has been greatly reduced in price, completely
Yep,
smashed, to be honest. So
yep,
maybe it is oversold, but you still wouldn't expect it to be up with oil up 26%, that's for sure.
yep, yep, yep.
Um, so in reality, the bigger picture is, and this probably goes into what I've said in previous podcasts,
Mm, mm.
where 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 authorities try and push markets around for various reasons, everybody benefits when gold goes up,
Yep.
but no one benefits when oil goes up.
And why would that be?
Um, so most countries own gold. Central banks
Yep,
been buying gold for a long time, so they're long of it.
yep,
Trump thinks he might be able to save the US financial system by revaluing gold a lot higher, let's say 20,000, 30,000, whatever it is.
yep.
So if the market does the legwork for him, it's
Mm,
a lot easier for him to do such a thing.
mm, mm,
It
mm.
also means the US dollar is lower,
Yep,
which is good because he wants exporters to be competitive. Um, so kind of like everything lines up that everyone wants gold higher, not silver higher. That's
no,
a different
yes,
thing.
yes,
And definitely nobody wants oil higher.
sure.
So if the authorities or the regulators, whatever, want to manipulate the markets, they'd love to manipulate gold higher and oil lower.
Yep, yep, fair enough. And the other thing you've outlined is where does capital go when capital reallocation is forced?
Yep, where it comes from.
And
So,
base,
so if a lot of capital's gone into Dubai, which it has, to
yep,
make it the new banking system and whatever, that capital is now on its way somewhere else,
yep,
which will be to London or New York.
yep,
And you'll see some benefits coming in the banking system in London and New York fairly soon once
yep,
markets have settled down. Um, and you might see the gold holdings in the Bank of England go up, or the Federal
mm,
Reserve in New York go up. But you don't keep your gold in a place between two countries at war.
yes, of course not. And if this continues as an extended war, what would that mean, or what do you think would occur?
Well, I think that inevitably gold has to go a lot higher.
Yep,
Big grab by everyone to get hold of it.
yep,
Uh, Stock markets will absolutely crack because war always brings destruction of capital, which is crazy because war originally started by a removal of capital from other people.
yes, yep,
Um, but now, especially in a possibly multipolar war,
mm,
everything gets destroyed.
yep,
Companies can't operate properly. Oil and gas, which no one is really talking about today, go to the moon. And if you think that energy is a really big problem in Europe, it's a
mm,
lot more today.
Yep.
Or should I say Friday, when all the gas fields got shut down.
Right.
So oil is about, obviously, petrol, diesel, and all of the other things associated with it, which
Yep.
are pretty much everything that we do and feel and look at. It's
Yep.
got an oil
Of
product
course.
in it somewhere.
So, is there anything more through the update that you wanted to explore, or did you want to go through what the prices look like now, given some of the changes that have occurred since Friday?
Yeah, so just wanted to whiz through what they are, because obviously
Yep.
they've been changing all morning. So Bitcoin is up, as is Ethereum and all the cryptos. The dollar is up, dollar yen is up a lot. Bond yields are up, which is interesting, because when we see that bond yields start dropping with oil higher, is where the markets start thinking about an economic crash. And the stock markets are, it depends where you are, because some are down, some are up, and there doesn't seem to be too much sense to it.
Yep.
But oil opened at 99.75, is currently 116.37, and has been as high as 119.50.
Yep.
And given that a week ago it was 70, that's quite a big difference.
That is a big change. Yes. Yep.
So that's the update for that. We'll take a look at the charts in a minute.
Yep.
Otherwise, this morning we had CPI and PPI out of China.
Yep.
That CPI was a lot higher, but that is really due to the Lunar New Year, which has finished fairly recently.
Yep.
Where Chinese seem to spend all their money. But PPI came in down 0.9 year on year, so input costs are still dropping. So there's no turnaround for the Chinese economy after, is it 4 years now of real estate losses? So there doesn't seem to be any change there.
Yep.
And the rest of the week, the real highlight, I suppose, tomorrow is CPI in the US.
Yep.
And we'll see what happens there. So those inflation numbers have been slightly higher.
Yes.
But we'll see where that goes. And they won't obviously have the price of oil in it when we see what comes out tomorrow. So
Okay.
maybe that will be not such an important number in the context.
Sure. Yep. All right. You want to go through the charts?
Absolutely. Bear with me for 1 second. So let's have a look at Bitcoin first, as usual. So we're in the buy zone. And today, we thought this would crash down, but in fact, we've seen the break up, and it's just hit where it broke out, has revisited the scene of the crime, and is now rallying. So that's really good result for Bitcoin. Ethereum, I think, is pretty much the same, in that we have a downtrend that's been broken out of.
Yes.
Lots of resistance above around 2,100, and the downtrend at 2,500 or so. This is everyone's favorite for the day, of course. This is oil daily.
Yes.
And, if you remember what happened when silver did this, silver is still $40 below that price.
Right.
Because moves like this can't sustain themselves.
No.
So if we look exactly what I'm talking about, you'll see that the move in silver, as it came up, couldn't sustain itself, had a big crash down. And currently, it's kind of neutral. And I suspect it's going to go lower, although I suspect gold might go higher, in that we're trying to keep in this wedge. And obviously today has distorted that currently, but we need to see where it closes. The dollar via the Dixie, we can reconnect that. You can see that it's gone up today, gapped up today, but it hasn't done too much. and we have all this overhead resistance from around 100 down to where it is today, 99 and a bit.
Yep.
And really, the dollar needs to keep above this line here to
Right.
keep its momentum. And this is the 15-year trend here, around 96.
Yep.
So that's quite important. Dollar yen, sorry, that's the Aussie. Dollar yen, you can see, has had this massive run up. And this is where traditionally the Bank of Japan has intervened. And that's why it's possibly being cautious at this level. In bonds, we also had a big run up in US yields. So 1, 2, 3, 4, 5, 6, 7 days worth of run up. And it hasn't broken higher yet. I'm not sure it will, because it's a tussle between inflation via oil and the economic deterioration. So maybe it's even got the right price for once. But you can see from the long end of the curve at the 30 years that really things are looking to be quite high. And so this is the high in 2023 as inflation went up to 9%.
Yep.
And you can see that with inflation at 3%, we're only 25 basis points, 0.25% away from that.
Sure.
So as markets look to the future, they're beginning to price in inflation.
And is that pricing in at the moment, when you look at oil and the price of oil and the cost that flows on from that, do they price in that additional increase? So the cost of doing business has gone up or will go up?
What the bond market is trying to price in is inflation in the future. And how does that relate to interest rates? So it's a complex thing, but really it's saying, do we expect inflation to become a problem in the future? Well, it's getting more of a problem, but it isn't a total problem at the moment. But equally, is the risk of very high oil prices going to crash the economy, in which case that yield can come down a lot with inflation? Now, that itself is a really bad situation, because that's stagflation. But there's two diametrically opposing forces dragging it both up and down at the moment. If we look at the ASX, you'll see that we had a big down move at the open, and it's kind of flat at the moment. And the Hang Seng in Hong Kong is pretty much the same, slightly up. And if you have a look at what should we choose, when the FTSE isn't in yet. When we closed on Friday, the S&P 500 had already broken below support and is currently 2% lower still, so somewhere down here. So it looks like markets are focusing on the US economic problems rather than European or Asian problems. And that's where all of the private credit, private equity busts are happening. It's where all of the loan delinquencies are happening, and it's when the commercial real estate problems are.
Things that we've covered in previous podcasts.
Exactly. So they're all coming back to haunt the US market now that oil seems to have broken the back of it. So that's pretty much it for the charts for today.
Excellent. Anything more with the next up that we have to worry about, or has that all been covered?
Well, we'll see where we are tomorrow. I mean, geopolitically, we're all waiting to see whether Trump actually manages to get something good out of this. I suspect he will go and do his usual taco, which is to relent on it and to try and find what he will call a peaceful solution.
Sure.
from the board of peace, who's
Yes.
just torched half of the Middle East and
Yeah,
created
exactly.
wars that didn't exist beforehand.
Exactly.
But I suspect that they will be very unwise to continue this going forward.
Yep.
Because Iran now doesn't have anything to lose.
Mm-hmm.
America does.
Yes. Well, interesting. So,
Yep.
thanks again for this week's update, especially the up in flames and the focus on the market. Very insightful. And once again, thanks again for your insights.
Thank you, Don. Thanks for listening.
So thanks. That's another wrap of this week's Limit Up podcast. This and previous podcasts can be located on the Siberia Capital website, or alternatively, you can subscribe by accessing the link at www.siberia.capital/contact. Thank you, everyone.
Cheers now.
Thank you.